Now, we've entered the tail end of the U.S. earnings season, which means that it's time for retailers to report. Walmart and Macy's are among those announcing this week. So for a look at the week ahead, we're joined now by David Buik of BGC Partners in London. Good morning, David. Now, unemployment is rising, but to what extent are people spending? That's basically going to be the big concern, the big theme here for the retailers' earnings this week.
Well, I think that's right. It's really the outlook that's concerning everybody. I don't think anybody thinks that the likes of Walmart, Macy's, particularly Nordstrom, which we believe has done extremely well, and Kohl's and various other people will do anything else than post figures that may even be slightly better than expectation. But it's the outlook that concerns us, because as unemployment goes up, rather a bit of a shock to us over here from 9.8% to 10.2%, that does rock people back on their heels and say, shall I go down to the shopping malls? Will we have a good Christmas, or will we just have an average Christmas? I think that is what is... Sorry, I beg your pardon.
No, I'm sorry, I didn't mean to interrupt. That's not new or anything. People know that unemployment has been rising. It's a lagging indicator. What is your fear specifically when it comes to these retailers? We're no longer seeing the desperate clearance sales that we were last year.
No, and also expectations are not too high, so it's probably all right. I think it was the increase in the rate of unemployment that shook everybody, and whether that actually, when it's spread across the television screens and across the newspapers, whether it does have an effect of dashing confidence a little bit, and that I think is everybody's major concern.
Gotcha. Now, lots of debt supply coming onto the market today. As I mentioned earlier, $81 billion of notes this week. Aside from a few hiccups, demand hasn't really been an issue. How long do you expect the U.S. can continue to see such strong demand for its debt?
I think it's really that we have to remember that there is billions of dollars, pounds, euros waiting in the wings to be invested. A lot of this rally that we've seen in various of these stocks have been done, marked up by market makers rather than seeing the real pressure of money. So I think what we're going to do is see the yield curve steepen sharply, because there is plenty of money, sloshing around at the short end. But as something like this $81 billion worth of treasuries that you talk about, it inevitably will push the yield curve up. I think the market can take it. And the way that the respect or disrespect will be shown will be the level in which way the yield curve increases.
So you don't expect demand to be an issue this week, then?
No, not particularly, because it strikes me as that whatever Europe, the United Kingdom, and more important because it's the largest of the lot, the United States wants to throw at the market, it seems to have the appetite at the right price, Scarlet, of being able to take it.
Always at the right price. Thank you so much. We've been speaking with David Buik of BGC Partners in London.